get a look now at where gold is headed. Jeffrey Nichols is a past president of the International Precious Metals Institute and a former member of the Metals Advisory Committee of the New York Mercantile Exchange. He is now senior economic advisor at Rosland Capital and a managing director at American Precious Metals Advisors. Welcome, Jeff. You're busy, huh?
Hi, Lori.
Okay, so gold actually it's turned around again today. So it's come in by about $8.60 the ounce right now to $1234.50. No surprise given the sharp run up we've seen of late.
Not at all. You know, markets never run in straight lines.
Sure.
And if it did, I think then we'd have a problem. But
would you say, though, gold ran up too far too fast, given the broader circumstances?
I think there was a rush into gold. It didn't run up too far too fast, but I think it's going to spend a little time building a base again. I think over the weekend, the news from the European community, and particularly the European Central Bank, proved to be a very bullish phenomena for gold. It promises much more rapid money growth in the next few years.
And speaking of much rapid growth, we're seeing a lot of at least demand here from mint and gold ETFs, correct?
Absolutely. One of the distinguishing features of this rally has been that there's been strong physical demand for small bars and coins and ETFs. The SPDR ETF traded on the New York Stock Exchange has seen phenomenal growth in the past week.
And regionally, geographically, we understand that the U.S. and Western Europe, right, are putting in most demand too. But how is Asia playing this rally?
Well, you know, Asia is always a very price-sensitive market. When the price runs up quickly, many of the buyers there stand back and wait to see if it's going to continue following through or if we're going to have a decline of sorts. And right now, it's sort of on a wait and see. And I think that's one of the factors that slows the advance to us looking at gold in dollar terms here.
What role is U.S. and European monetary policy playing in all of this?
Well, really, it's just more of the same, more quantitative easing.
Yeah.
The European Central Bank, some say, gave up their independence this weekend and will be buying bonds and debt in what they call dysfunctional markets, not just government bonds, but private sector.
Could I ask you about the bonds? Because we talked to our Sarah Eisen about that because she covers currency. Were you surprised at the switch? Because remember, Mr. Trichet of the ECB said they weren't going to buy government bonds, and then 48 hours later they did.
Right, but you know, there was rioting in the streets last week.
Yeah.
And a lot of political pressure to do something about that. I think they're realizing that they can't just clamp down on the fiscal side without repercussions.
And the repercussions being what we saw in the streets, those things in the streets?
Okay, so continue with your answer. Jeff, I wanted to ask you, well, you know, everyone's so bullish on gold. What could be bearish for it? I mean, maybe we'll get a stabilization out of Greece. There's a prime minister in the UK after some tumult earlier this week.
Really, I think in the short term, you know, gold could adjust downwards. But in the long term, it's going much, much higher. And I don't think there's anything that can really stop it. The fundamentals are in place. We've had years of excessive spending here in the U.S. by the government, by the private sector, borrowing that was you know, unsustainable and unrealistic. Europe, at least its southern tier, has done the same thing. Eventually, we have to pay the piper.
And we're looking at that chart. I think if we could put that up again, I think the one-year chart we showed of gold, it was up about 33% for the year. Is that correct? Yeah, 33.5%.
So you were calling, Jeff, for a new high in gold by June, so we're really running ahead of your schedule. Have you boosted your outlook? What is, you haven't given...
Well, no, I'm sticking to my viewpoint that we'll see gold at $1,500 by year end. In the next few years, $2,000 and $3,000 an ounce seems perfectly realistic.
Jeff, could I ask you in our last 30 seconds, what about demand from India? What are you seeing there?
Well, short term, it's responded to the price. It's eased off a bit. But long term, it's a very bullish phenomena for gold. India is going to have a strong income this year. The economy is doing well. The harvests, which for the agrarian economy are very important, monsoons are supposed to be adequate, so there's going to be income to the agrarian sector. Those are the people who buy the most gold. I think that's a plus this year, and it's a plus into the next few years as that market continues to evolve and develop.
All right, Jeffrey Nichols, Senior Economic Advisor, Rosland Capital, joining us here on set. Always good to have you on. Thanks so much. Appreciate it.
Thanks so much, too.